sometimes when stocks are doing badly, I get worried. Not because I want to get out, but because I wonder if I might be missing a once-in-a-generational bottom. Those don't come around all that often, of course. And right now I'm concerned that we might be missing a bottom in a group of stocks that I haven't particularly cared for at all, especially in a long time, including in How to Make Money in Any Market, which, by the way, I'm signing tomorrow night, 6:30 p.m., Barnes & Noble on Atlantic in Brooklyn. Please come see me. The group that I'm talking about, the consumer packaged goods stocks. Too much inflation, not enough growth, growth being the magic elixir that makes your investment winners, and it doesn't have it. When you take a stock like Kimberly Clark or Procter & Gamble, you're pretty much bracing yourself for the house of pain. And the pain doesn't seem to end until the stocks fall to the point where their dividend yields become competitive with the bond market. Aha! Well, that means that we're there. Why bother with these? Because I keep thinking about what my writing partner Matt Horween tells me. We may be looking at peak inflation, and these are undervalued winners of their categories. Peak inflation would drive their costs down, while their scale would normally prevent them from merging to dominate the industry. This administration doesn't seem to care too much about antitrust enforcement, and that's why Kimberly Clark Kenvue deal's all about. And if you can't find enough consumer packaged goods that are appealing, you can always expand your hunt, cast the net to the big pharmaceuticals, where I also expect a ton of mergers to happen. Well, what's a good example? I use Procter & Gamble on How to Make Money in Any Market because the company's so rigorous and inventive. Right now, Procter yields 2.85%, and you know it has the scale and the science to make things cheaper. You might want to consider Kimberly Clark, too. It's been knocked down to a level where it sports a 4.89% yield because it's trying to buy Kenvue, which has fantastic brands, but is tailing right now because of nonsense regulatory problems involving Tylenol. Right now, the publicity is making people skittish. But the science is on Kenvue's side. Its brands complement Kimberly Clark perfectly. I'm looking at Clorox. Oh, boy, one of the worst stocks in the S&P 500. This year, it's some terrific brands here, Burt's Bees, Hidden Valley Ranch, Brita Filters, Kingsford Charcoal, and, of course, Clorox itself. Got a 4.72% yield. Risk takers might want to consider General Mills, but only if you're betting on a takeover, because the food stocks are being eaten alive by those GLP-1 weight loss drugs. If you want to venture beyond what we call the CPG, consumer packaged goods world, I think you do very well with owning J&J or Amgen, whom we talked to last night. J&J is getting out of everything non-proprietary, artificial choice, for example, and really bearing down on high-growth pharma, with cancer being a specialty. Amgen is working on cholesterol with its Repatha injection, and it's doing something very different with weight loss that could lead to terrific outcomes. They both have yields, more than 2.7%. How strongly do I feel about these former safety stocks? We have a monthly investment club meeting on Thursday, and I've told Jeff Marks, my co-portfolio manager, that we at least have to put one of these names in the bullpen. I don't want to wait to look back and say, how did we miss that bottom? Too much opportunity to pass up on, given that these are all currently among the most hated companies in the universe. Plus, they got juicy dividends. And they are ideal, by the way, for the older cohort who still watch the show. I'd like to say, as always, bull market summary. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.